our big guest joining us now, Ridham Desai, is joining us, Head of India Research at Morgan Stanley and Managing Director, of course. Ridham, good afternoon. Thanks a lot for joining us. First question first, how are you managing in the lockdown? No gym for you, right?
Yeah, no, that's okay. I've not missed my gym actually. So it was a long pending thing for me to start doing yoga. So I've migrated to doing yoga.
Okay.
So actually I'm quite enjoying it.
Okay, great. So
yeah, maybe
send me a video of Ridham.
Yeah, maybe when the lockdown ends, I'll stop gymming and permanently move to yoga. Who knows?
Oh, wow. Okay. So you know what? There's a lot of this. That's a tectonic shift. Ridham, is the market also seeing some kind of tectonic shift? I'll talk about your broader call, but the texture of the market is changing. Money moving from financials into pharma, Reliance, digital stocks, telecom stocks. Your thoughts?
Yeah, so, let me just give me a few moments on this because I need to first set the backdrop and then I'll come to this very specific point that you raised. So the backdrop is that COVID-19 has evinced a very strong fiscal and monetary response the world over. And it's quite unprecedented. The world has never seen such a response. Even during World War II, in the aftermath of World War II, we didn't see such coordinated policy response either across geographies or across agencies. So government and monetary policy getting together. Remember in the Great Depression, there was no monetary policy because there was the gold standard. So this is very unprecedented. It is multiple times more than the stimulus that was put in the in post global financial crisis 2008-9. When we come out of this, all the stimulus is waiting to kick in. It's going to create a ferocious bull market around the world. What is required is essentially some comfort that the worst on COVID-19 is over, and more appropriately, that we have a vaccine or a cure. So when the world starts sensing that we have one of these two things, I think this money is going to move into asset markets and equities particularly. So we have to brace ourselves for that. I cannot time it in any way. I don't know whether it's 3 months down the line or it's going to take 6 months. That we'll have to see. And I even don't know whether we will, make a double bottom before that, come back to revisit the March end lows or not. So those are imponderables because they depend on how COVID-19 progresses. The news from around the world is encouraging. In a lot of places where it was threatening to create more casualties, it's now calming down. So let's see. In our minds, that backdrop in our minds, that there is an unprecedented stimulus that has been put in place, which is waiting to find its way into the markets as well as the economy once confidence returns.
Okay.
Now, coming back to your specific question, I think bull markets are created on the back of new sectors all the time. So in the mid-90s, it was energy. Then it was consumer staples. At the turn of the millennium, as we know, it was technology. Then during the 2003-07 bull market, it was actually energy in India that led the bull market. One specific stock, in fact. And then we got this big bull market in financials. And it's lasted really long. It's gone on for 7-8 years. And it's created some serious market cap in the financial space, but particularly in NBFCs and in private sector financials. I dare say that when financials hit 30% of Nifty's market cap in February, we may have marked a peak in that cycle. So when a new bull market starts, and maybe one has already started, and 24th March was the day when we created the bottom in the market, I think financials may not lead the way, and the leadership may shift. It may shift to consumer discretionary. It may shift to healthcare. It may shift to it may shift to energy, or it may shift to telecoms. It's likely to shift to other sectors. So the glory days for financials may be behind us. Now, of course, that doesn't mean that we don't get big rallies now and then, and particularly after what has happened to those stocks over the past 4 or 5 weeks. We should always be prepared for big bounce backs. But I think the leadership of the next bull market is going to be different. We're betting on consumer discretionary, followed by healthcare, and to some extent energy. And that's what we think will lead the next bull market, but let's see.
Okay, Ridham, when you say that, do you see, for example, I know you don't talk stocks, but, for example, you've seen a big decline in names like TVR or a Jubilant Foodwork. A lot of these names, a lot of restaurant stocks have fallen a lot. Consumption names have fallen a lot. The big concern which is being raised is that even while there might be a pent-up demand, the way we approach things post-COVID will be different. So in that sense, what part of discretionary consumption do you think would lead this big rally that you're talking about?
Thank you, Anuj, because I think that was a very important follow-up question. So here is my analysis. So far, India has come away relatively unscathed by COVID-19. And as a consequence, I don't see permanent shift in consumer behavior. So as the company opens up and as things go back on stream, I think consumer behavior will revert to where it was in, say, February. So a lot of these businesses that are being affected because of the lockdown, because of social distancing, I think will come back. Now, they may not all come back together, and there may be some gaps. Some may come back immediately, some may take 3 or 6 months, and some may take even 12 months. However, the point that I'm trying to make here is that I don't see permanent shifts in behavior because we have really not been affected as much. I mean, even though it's tragic to talk about death, the fact is that we've really not seen that much of fatalities around COVID-19. And even though the disease is still evolving in India and we have not seen the peak, given what has happened thus far, given the low testing yields that India has had, given the low fatality, given the high recovery rate, it seems less likely that we will suffer the same fate that several European countries or even the United States has suffered. So maybe in those countries there will be a permanent shift or a more lasting shift from COVID-19 and there will be shifts in business models. In India, I think we may actually not see those shifts and they may be rather temporary in nature. The other sector in the consumer discretionary space which appeals a lot is autos. I think autos has gone through a big down cycle and in several sub-parts of autos, demand is where it was in 2013 or 2014. So this is really depressed. So there should be a lot of pent-up demand that may come to the fore in 2020, in 21 or 22. And even if you just replace the cars that were purchased in 2013, because now those are 8 years old, a lot of those consumers will be back to replace the cars. That itself should drive a pretty strong recovery in passenger vehicles and even in two-wheelers. So I think that's another space. And then, of course, if autos is doing well, then the auto component companies should also do well. So frankly, if you're asking me this question, I like almost every subsector in the consumer discretionary space. I don't see much disruption happening in India, save for the disruption that was anyway there in place pre-COVID, which was technology related. So some of that may persist, but I don't see disruption relating to COVID-19 persisting for more than 6 or 12 months.
Okay. Ridham, hi, good afternoon. I can't tell you, it's so good to hear the optimism and especially for all of us. I mean, we're all part of the consumer chain, right? And we'd love to go back to the malls and travel more and, go out there and perhaps even buy new cars. But I must play devil's advocate. So allow me this question, and I want to go back to the bigger call that you made, that a bottom has been made. Where is the conviction coming from? Because one could counter-argue. The bears will argue saying stimulus in India has been underwhelming. Bears can argue that our numbers, the rate of infection is still spiking pretty high. And we have different issues like congested cities, etc. So where's the optimism coming from?
I mean, this was as it was, I was actually on your channel the day when we had made this call that we may have hit a market bottom. That call was premised largely on where sentiment and valuations were then. So we did hit a very big trough on valuations and sentiment around that last week of March. And that's when I thought that, share prices may have made a bottom. One never knows with these things. We can always revisit that. I hate to use any one bear market cycle as a template, but just for argument purposes, if we used the global financial crisis as a template, the market made a trough in October 2008, rallied sharply, and then came all the way back to the October 08 levels within kissing distance of that level in February of 2009 or somewhere in early March 2009. So in 6 months, we came back to that level, and then we started a very big move, which went on for several months. So it's not to say that this market will follow that template. Every market has its own behavior pattern. So one can never be absolutely sure that a bottom has been hit. But at those 7,500, 7,600 levels of Nifty, we get to valuations which are so attractive that I think, it compels us to say that, maybe this is the bottom. So that was where the confidence came from. It was not on the basis of where COVID-19 was going to head or where India's growth rate was going to fall. Those are issues that get resolved much later. Markets make their bottoms well ahead of economic cycles. So we should not get into the business of forecasting economic cycles when we're trying to call market tops and market bottoms. That, I think, is one point. The second point on your question on the fiscal stimulus, the jury is out on this, and it's also something that I'm debating in my head. So the phrase that I've heard from various government sources is that the fiscal package will focus on affordability and not on need. And I think precisely that's what we have seen. The government has conserved the fiscal room, maybe with two things in mind. One is that it saves some bullets for firing later on. And second is that it actually conserves India's macro stability, which may also be as important as stimulating growth. Now, if you assume for a moment that COVID-19 has not had such a big impact on India, then I think this strategy may actually end up working. Unlike the Western Hemisphere, where COVID-19 has been very disruptive because of just the scale of the disease. Now, having said that, it is very clear that the lockdown is creating a lot of pain. And therefore, my view is that the biggest stimulus that we can get is to come out of the lockdown. And that's what's happening right now. We are, without making a great fuss about it, slowly walking out of the lockdown. So trains are restarting, airports are restarting, stores have reopened. And I think over the course of the next 2 or 3 weeks, if we can bring large parts of the economy back into working condition, that in itself should be good enough to pull India out of this. And then what we need is stability in growth, which is still not there. Let's not make any mistake about that. But, we need that to come back. And then I think the economy will look a little better. This quarter is a washout, and there's no doubt about it. The next quarter will also be a problem. It will not be smooth. But I think the second half could be a whole lot better.
Okay, that's a very important point. But Ridham, just to extend that argument a little bit more, you've had this migrant labor issue. Don't think that's they're going to come back in a hurry. There have been so many job losses. Yesterday we spoke about Ola, and there's so many startups where we have seen some problems. This is going to impact the demographic dividend as well. So, at some point, do you think this will hurt? Or as you said, this is going to be just a 3 to 6 month factor?
So on migrant labor, I think clearly there is going to be some issue. But I think it's important to get into the numbers because what we get to see is only pictures, which are very depressing, of people stranded on highways and trying to walk home and struggling on very unsafe transportation in an effort to get back because they don't have a roof to live under or a meal to eat. So, keeping, that humanitarian aspect aside, and I was just seeing some numbers that were quoted by Manish Sabharwal, I think yesterday or earlier today, that only a fraction of the total migrant workers in India actually moved back home. I think by his statistics, and I don't have those statistics, so I'm using his stats without his permission, but it's only 2%. It's a very large number. It's 1 million people. But it's only 2% of India's total migrant workforce. So in India, these numbers can get very misleading because we can see lots of people on the highways, thousands of people, but they may not add up to significant portion of our workforce. So I have had this view all along that we will actually come back quite quickly. Why? Because a lot of these people want to start working. You see, by not throwing cash at them, by not giving them cash in their bank accounts, what the government may have done is basically ensure that we come back quickly, because after all these people need a living to make, and the only living they have is the jobs that they have. So the minute they sense that the jobs are back, I think they will be back. So that's my current optimism. We'll see how that goes. Just one note of caution that I will give here